Welcome back to the channel. Today I want to talk about one of my favorite stocks I'm currently looking at in the markets right now, and that is Amazon stock. So Amazon has been kind of trading sideways this whole year, as you can see in the last year. Looking back to all the way around January, it was in the exact same price range as it is currently trading right now. As you can see, it's at $216 per share, down 5% back on Friday in that market pullback we saw on Friday with the news about tariffs, which is definitely something to look out for with Amazon. But it's a strong company, and I was looking at investorwaves.com. We track all of the market commentary and trade calls on stocks from different podcasts and YouTube videos, so you can kind of get a sense of what these other experts and people in the markets are talking about and get a sense of the sentiment around them. And there has been a few people, on my radar that have talked about Amazon. One of those being Stocks with Josh, Jose Najarro, and some other creators here talking about Amazon. And I decided to take a deeper look based on what they said. As you can see, since collecting Amazon trade ideas in the last 30 days, it's been almost all bullish sentiment, despite the share price not really going up as much as those other Mag 7 stocks, right? So Amazon as a business has been increasing revenue and profits. It's at record highs, right? And despite these higher profits this year, the stock is still trading below where it started, or about where it started the start of 2025. And it's one of the, you could say, worst performing Mag 7 stocks, right? Because despite the bull run that's been going on since April, it just hasn't kept up in terms of returns. But it's still a great business and a great company. As you can see, net sales from quarter one of 2025 grew 9% year over year to $155 billion, with AWS revenue growing 17%. And then Q2 net sales up 13%, AWS revenue up 17.5%. And for Amazon's trailing 12 months revenue, it reached $670 billion, which is up from $638 billion. So it's a growing business, and gross profits are up as well. Over the past 12 months, gross profits rose 13.7%. Now, that is all great and all, but why is the stock still not reflecting those numbers? There has been a lot of pushback about the CapEx spending they've had. They've had a huge jump in spending from, $83 billion in 2024, and they've already spent $57 billion in first half of 2025. And much of this is tied to AI infrastructure, data centers. They invested a lot of money into data centers. I believe it was in Pennsylvania. And so that is kind of lowering their earnings on that. And then critics kind of argued that this level of spending could echo the dot-com bubble with, the AI bubble, the whole circular AI economy coming. Maybe that could lead to a crash, but I would argue that Amazon is kind of in the best position possible for an AI adjacent company if there was some sort of bubble pop or bubble burst, because of their retail business, because they're so diversified over so many lines of business, and they continue to heavily invest, but they haven't quite realized the upside from these investments. So when those start to pay off, that could be a growth catalyst. They have healthcare and logistics expansions that could open, those new revenue streams. And they have one thing that I haven't seen talked whole lot about quite yet, is this Project Cooper. I believe that's how it's pronounced. But it is their new innovation in basically making a Starlink competitor, which is the Orbit satellite broadband network. And that basically gives you fast, reliable internet to almost anywhere around the world. And I think this if you're a long term looking at really the long term view of this company, I think this could be a very successful product line. And they're starting to roll this out in early 2026 and expanding to all of those countries listed there in 2026. But really by the end of 2025, they have a few growth catalysts. They have some things that I was thinking about in terms of the price per share and how it could affect the stock. And one of those is their upcoming earnings date. So they reported good earnings in Q1 and Q2, but Q3 is approaching, I believe, here in about 2 weeks, their earnings call for that. And I think a key support zone for this Amazon stock right now is right around where it is. Definitely above $200 per share. If it does touch $200 per share, that would be very tempting to buy. But if it can hold this zone and then report a good earnings call into Q4, I'm sure the sentiment, if they can weather all of these tariff discussions and things like that, the sentiment around Amazon is always kind of top of mind because of the holidays and the increased spending, the Black Fridays and all that stuff. And so I think it wouldn't be unheard of to see a push to at least $230 per share up to $260. That's what Stocks with Josh was actually saying, that he loves the $260 per share range. And I think this is a great company over the long term because they have a very diversified product line. The fundamentals are strong, and they look positioned for a rebound and some sort of catalyst, right? And so this was a stock I would add to your watch list. Do some due diligence on it yourself. See what you think about it. And I am sending out 3 stock ideas from podcasts each day to help you find your next possible position or get some other opinions and commentary on different stocks and just kind of open your mind to other opportunities out there. So if you want to get that, it's completely free. Just put your email in this subscription box. I'll put the link in the description, and let me know what you think about Amazon stock. Is it something that you're looking at? Are you invested in? And yeah, we'll see you tomorrow.